For more on the markets as investors gear up for the Fed meeting next week. I want to bring in Hank Smith. He's the head of investment strategy at Haverford Trust. Good morning to you.
Good morning, Andrew, and happy holidays.
Happy holidays. Are we in a Christmas rally? We were talking, what is it? We were calling it a Christmas rally, a Santa Claus rally, but it doesn't really happen that way until later, technically?
Supposedly, strictly speaking, it's after Christmas.
Between Christmas and New Year's.
Christmas.
But
really? Seasonally, isn't December?
What do you think?
Seasonally is one of the best months of the year.
Is the Fed gonna help that or hurt that ahead? Is the Grinch coming, or is it going to be great?
Well, unless you get an article from the Wall Street Journal this weekend indicating change of plans, I think you're going to get a quarter-point cut.
And you don't believe any of the numbers that we've seen, which have been a little bit hotter on the inflation side, are going to change his view?
No, I think it'll change it in 2025. And our expectation, it's been this way for quite a while, is you're not going to see 5, 6 quarter-point rate cuts. You're going to see 2 or 3. And it's going to go very slow because really the economy is in good shape. I don't think the Fed needs to worry about that. They need to worry about perhaps an uptick in inflation and the kind of the stickiness of where we are right now. But the good news is the stock market really doesn't care about a 2% target for inflation. Only the Fed's reputation is at risk.
Okay.
The stock market, I think, is perfectly fine.
Given how much this market has run already, the question is, what does 25 really portend in your mind?
Well, I think it would be fanciful to think that we're going to get another 20% plus year in 25. But look, S&P 500 earnings growth estimates are around 14, 15%. You could easily have a 10, 12% return in the market with no PE expansion. And that is really our expectation.
And so what are you doing about it in terms of just industry by industry?
Well, look, it's been a very, very challenging market up until the beginning of the summer because of the concentration in the Mag 7, or what we refer to as the top 10 stocks of the S&P 500. You did start seeing a broadening out in the beginning of the summer. That has kind of stalled in the last couple of weeks as the Mag 7 has taken back over. But we expect that broadening out to continue in 25 for a couple of reasons. Fundamentally, the other 490 companies are seeing an acceleration in EPS growth. The so-called top 10 or Mag 7 are actually going to see a little deacceleration in earnings growth. So there's a fundamental reason. Plus, the laws of math dictate that.
But does that mean like you like the Russell, or you'd like small caps, or you think that, I mean, where do you go?
Well, we're primarily a large cap dividend paying.
That's what I always thought.
Dividend paying manager. And look, there are plenty of opportunities for dividends out there, but it's mostly in the out of favor, more value oriented.
So give us some names.
And in the healthcare sector.
Can you give us some names?
Sure. You go down the healthcare sector, J&J, Merck, all have wonderful yields. You have earnings growth, modest, dividend growth, and very attractive valuations. Yes, I know the charts look horrible.
Right. Well, the charts are tough. Look at that. Look at that chart.
Yeah. It's not a fun chart. But this is the most out of favor sector, hated. In fact, it is at one of its lowest points of weighting in the S&P 500 in a recent
And you think
memory.
it gets better? Because one of the arguments against it, even right this moment, would be that depending on what you think happens with the government over the next 4 years, that maybe they actually do take a look at health care.
Yeah, the cloud of government regulation has been on this industry for 2 decades now, going way back to Hillary Care, then Obamacare, and now with all of the attention after the death of the United Healthcare executive, all this negative attention. But let's not forget one thing. The most powerful secular trend that cannot change, the aging of the baby boom generation, followed by the next wave, is so beneficial to this industry.